I'm way, way, way overweighted. But even Morgan Stanley came out a couple weeks ago and recommended 20% of their clients' portfolios be allocated to gold. Like that was a incredibly large percentage of a portfolio. I've never heard of anybody recommending that high of one to anyone before. So all the other assets are in real trouble relative to gold, and I think that's a big problem. I think people have to be aware of this.
Matt Smith, host of the Doc Casey's Take podcast, as well as co-author of the recently published book, The Preparation. It's a true pleasure to host you on Palisades Gold Radio today.
Well, thank you. Thanks for having me. I appreciate it.
Yeah, really excited for this chat, Matt. Of course, we're going to be talking about your book, Precious Metals, geopolitics, and a few other topics I would love to squeeze in. But before that, perhaps we can get started with what's on your radar currently. What is something that you're tracking and looking at that the viewers at home, as well as I, might be missing?
Well, I don't know if anyone's missing it, but the big thing I was thinking about earlier today, because preparing a presentation that I have to give next week, was on gold, related to obviously to what your channel is near and dear to your channel's heart. Um, and this relentless pursuit of higher and higher highs, right? Like I have to say in my personal portfolio, it's made me nervous. When I mean I've there aren't many years where where everything, well, you're well over 100% up year to date, So it's given me some pause, some worry and about because is there going to be a pullback or something like that. But I think the major, and there could be, of course, but I think the major thing that that seems very obvious is that this is not a bull market like any other bull market. I mean, Doug said to me like 18 months ago, just offhandedly during our podcast, he said, "Oh, this is the last gold bull market." And I thought that was very interesting, but it makes perfect sense once gold is money again, which is, I think, how it's going to be on the other side of this. There won't be that arbitrage to take in bull and bear markets related to gold, Um, so yeah, I think that's a big thing that I'm thinking about because the price is just so incredible. I mean, topping 4,000 the other day. I think it's like 4,040 or so, something like right now. But you know, I guess the idea that's been interesting to me is as Trump came into office, it was clear he had a very aggressive economic agenda to try and rebalance the trading system and I think reset the monetary system as well. And I early in the year before the tariffs were announced, I talked about the fact that that was their plan to aggressively use tariffs again, as they did a little bit during the first term. And the purpose of the tariffs was not to generate income, but to actually coerce your trading partners into cooperation in a devaluation of the U.S. dollar. That's the way it's been used in the past. And ultimately, there would be a new monetary framework that would come out of it. That's what people were dubbing the Mar-a-Lago Accord. And I think that it's. I don't know if the U.S. has an agreement with China on this at this point, but but it seems to me that there is an understanding that they're basically going to use gold as a giant liquidity sink to devalue the currency and to reestablish everyone's balance sheets. Of course, the average American is going to be really damaged by this, but either the U.S. is being totally dragged along by China, or it's like there's a understanding with this because there's no effort to suppress the gold price at this point. We saw these huge inflows of gold into the U.S. at the very start of Trump's term, actually starting, I guess, in January, before he even came into office. And they're inexplicable. I mean, there's no answer for them yet. I still think that the Treasury or the Fed was behind those massive imports. But yeah, I mean, it does seem to me that they're allowing it. They're not gonna put a limit on what it can go up to.
So many threads to pull on right there. Perhaps the one we can start it with. Of course, the current gold price is giving you some pause. If you look at it from a technical perspective, seems to be heavily overbought, for example, on the RSI. If you look at some indicators, gold price expressed as the amount of ounces it takes to buy a median home in the US, gold looks very expensive currently. If you then plot it against M2, it all of a sudden looks incredibly cheap. So what are you making of all those indicators, the 55% rise we've seen this year thus far? Is this still an attractive asset to own and add to?
I think you have to at this point. Yeah, those indicators are true, but you have to. Yeah, the biggest thing I think is the M2 money one, right? Is it the M2? It has to get up to historical. It had to be like 23,000 plus, something like that. So, and I think it can go probably a lot higher than that. I mean, I think it's going to be in this 1970s, oil was the sink, the liquidity sink. And but there are problems with that. Obviously, it causes inflation, causes damage to the economy. The great thing about gold being the sink, it's not going to have those negative repercussions. I mean, where does all the liquidity in the world go? If it goes into gold, it essentially it accomplishes what they need to accomplish, which is to have liquidity in the system soaked up and to allow the devaluation of the dollar, which must happen and is certainly an objective of the administration, um, without much damage overall. Without like second order consequences in the same way. And when you see what China's set up with their basically, you know, their yuan to gold swaps, or not swaps, but basically you can redeem it essentially for gold. I think it's setting up the system so that it actually benefits China too. It benefits China in that like there was a lot of worry about the economic situation in China from what people in the West because of the housing issue. The huge boom that went bust. Um, but this is like fixed the balance sheets of the Chinese people now because they've I think since was it 2002, something like that. There's been like 27,000 tons of gold that has been taken off the Shanghai Gold Exchange by the Chinese. So their balance sheets are rich. I mean, up 50% this year. So I don't know. It seems to be work well for both parties. So I think China and the U.S. might have a unspoken agreement actually.
That's a very interesting take. Two concepts you mentioned there. The US has to devalue the dollar. Perhaps you can quickly expand on that, why that is. I'm sure I know why. We just want to not make assumptions there. And you mentioned the liquidity sink. Oil used to be that in the 1970s, 1980s. Gold being that now, that would mean all the money that's being pumped into the financial system through printing of currency and government debts that needs to find an outlet. And you're thinking they might use gold for that,
I
which
think they are
might not
using
actually.
gold. I think that's what explains what we've seen, honestly, that this steady rise without any resistance at all. The state hasn't gotten in the way of it. I mean, even all the gold that was taken for delivery on COMEX can change the rules anytime. If it was me doing it, they would stop me. They would change the rules. I wouldn't allow it. They so I think that I think that they are aware and there is a plan at work actually, and I don't think it's going to be good for the average American because the devaluation is going to be massive. But I think that is what we're seeing. And so why do they need it? Well, everyone knows about the $37 trillion of debt, but it's really the 175 or so billion dollars of unfunded liabilities. Like that's the big problem. That's stuff that we owe to each other. Americans owe that to each other. So we can't say, oh, just, screw the foreigners or whatever that might own a portion of our debt. I mean, that's definitely not something you can get out of easily. So, and I think total tax receipts are like 5% of that annually. So you just see it's just totally unpayable and getting worse every year. So I think the only way out is, well, either austerity of some kind, which I don't think is politically acceptable. So I think it's inflate. inflate is the answer.
Today's episode of Palisades Gold Radio is proudly brought to you by our parent company, Palisades Goldcorp, Canada's leading junior resource investment vehicle, trading on the Toronto Venture Exchange under ticker symbol PALI, with equity and warrant positions in over 200 companies, ownership of mineral projects and royalties, and a 15% stake in newfound gold. Palisades offers investors powerful, leveraged exposure to precious metals, uranium, copper, and other critical minerals. Palisade shareholders directly benefit from our team's extensive industry knowledge and access to deal flow, opportunities historically reserved for a small group of investors. To learn more, visit us at palisade.ca and join us in our mission to level the playing field for investors. Now, back to the show. Yeah, I had to laugh when you mentioned austerity. That does seem very unlikely. Talking about this silent agreement between China and the US, of course, Brics seems to be going the direction of a gold-backed settlement currency in some way, shape, or form. How could that play into it? Of course, with the gold rising so much and the dollar declining in use cases, that seems to be counterproductive for the United States.
Well, I mean, the Chinese yuan is declining also in gold terms. So every currency in the world is. I think that, and I think that ultimately we're going to end up where we're all on a gold-backed system of some sort, once it's all said and done. So I think we'll come back into alignment globally around that, actually, once this process runs its course, although that's going to be a painful course for sure. So I don't see it as really, I mean, you see these sides as being on opposite sides and competing. And there is, justification for thinking that, but I think everyone understands that the debt is unpayable. And I think that, obviously China still would prefer to trade with the US. So I think it makes sense for them to still cooperate, and all of the really insane tariffs that Trump had at first on Chinese goods, it was pared back a lot. And, that's the kind of thing you would see under one, if there's an understanding between the parties.
All right, well understood. You mentioned tariffs, of course. Oh, sorry?
I was just going to say, this is just speculation on my part, but I don't see any resistance from any government to it, the US or on the Chinese side. I just think everyone's going with it.
It definitely seems like that way. There is very few resistance against the gold price in that sense. You mentioned tariffs earlier on. It was a really big thing, of course, earlier this year, and now everyone seems to have forgotten about it, and the world is just going on. Where do you think that situation will end up?
I think tariffs are only used as a bludgeon to get to coerce your trading partners. So I think that as soon as there's a clear agreement, on again allowing the U.S. to do what it thinks it needs to do, that then they'll be pulled away or pared back. So I think they've never been a tool or they haven't in years, and well over 100 years, been used really as a tool for really raising money. And we aren't seeing like the administration say, oh, we're going to offset income taxes with this extra 200 billion we've already gotten from tariffs. And I don't think there's any plans to do that, anything like that at all, even though it's been talked about. So I think it's just a matter of getting their cooperation, as it has been in the past, as it was, when right after we went off the gold standard. I mean, immediately then, I don't know if you know this, but in the same announcement that we're closing the gold window, there was an announcement of tariffs. Why? Because we needed the cooperation of our trading partners to cooperate in the devaluation of our currency. And so it's just used as a bludgeon. And I think if they're getting the results they want from them, from the trading partners, then they'll ease them.
That's an incredibly interesting insight. I wasn't aware of that tariffs were announced in 1971, was it? As well?
Yep.
Yeah, wow. Incredible. You're, of course, located in South America, and stablecoins are picking up massively in that continent. Recently, a advisor of Putin made a quote, as in the 1930s and 1970s, the US plans to solve its financial problems at the world's expense, this time by pushing everyone into the crypto cloud. And that is, of course, referring to stablecoins. And apparently, the US is trying to potentially solve their debt problem using that. Do you know what that's all about? And is that something you give credence to?
I think it's less about solving the debt problem because it doesn't get close to solving that $175 trillion debt problem, which is the real debt problem. Everyone just focuses on the federal debt, and that's just not even scratching the surface of it. Uh, will it alleviate some problems there? Yes. I mean, it does a little bit around the edges, around the margins now it does, and I think it could more in the future. But I think that's really more for like the post reset. I think it's for after the devaluation has occurred and kind of the rollout of more of these digital controls. And of course, they may make it backed by gold. I mean, everyone talks about Tether as the main one. Tether has a Tether gold, so that's also being tested at the same time as one that's based upon treasuries as a backing. And I think they've got like $3.5 billion or so worth of gold on it right now, which is not a huge amount, but it just shows you they're testing it. That shows you what's possible.
Yeah, I actually have their website open right now. There was something I wanted to bring up, Tether Gold as well. It's a $1.5 billion market cap currently in their vaults.
Mm.
Yeah, it's
Listen,
it's it's getting there.
yeah, I mean, there's not much demand for that really. I mean, the stable coins there's much more demand for because well, because most people price things in dollars, so it makes it easier, for them to think of it that way. But But yeah, I think that's going to end up being a big part of the future. No doubt, crypto, like digital money, is going to be part of it because of the control mechanisms. I think as much as anything else, but also because of the real utility. They are easier, and you're right. It is very popular in some parts of South America, not where I am in Uruguay, but in Argentina, it's extremely popular, and there are other countries as well.
The hotspots where inflation is running hot and therefore they're fleeing to the dollar.
Right, exactly. Yep, and that's a dollar they can get a lot easier, frankly.
Yeah. Talking about gold as part of a portfolio, of course, you're also part of crisis investing, referencing some type of hedging against risk. Where do you think gold should be as part of a portfolio?
Well, I'm definitely way overweighted personally between gold stocks and gold itself. I'm way, way, way overweighted. But even Morgan Stanley came out was a couple weeks ago and recommended 20% of their clients' portfolios be allocated to gold. Like that was a incredibly large percentage of a portfolio. I've never heard of anybody recommending that high of one to anyone before. So I think these all the other assets are in real trouble relative to gold, and I think that's a big problem. I think people have to be aware of this, and this revaluation has been going on for a long time. You talked about gold in relation to housing prices, where it seems like it's too expensive, um, because in fact, if you bought a house in the year 2000 in the U.S., it would take I don't know how many like 400 ounces of gold or something on for the median home, and it's 100 today, which means housing has gone down in the last 25 years in gold terms. I think that trend is the big trend, and it has been going on for a while, and we're getting into those final stages now, and it's becoming more and more obvious. So I think there's great risk of not owning enough gold at this stage. I don't think anyone
Great,
owns too much.
great risk of not owning enough gold. All right. How long could this take? This reset that you're talking about, is that a question of a couple of years? Is that 10 years?
I think that Trump's team really intends to do it during his administration. Um, will they be able to get it done in time? I don't know. I don't know. But you got to think that there's a lot of devastation that's going to last a lot longer than that, actually. But I wouldn't. Yeah, I mean the final capstone to the whole thing when they finally admit, okay, the currency is, we're not, it doesn't work anymore. We're going to go to something that we can rely on and putting gold in the back end. It's hard to imagine that happening during Trump's term. That would be very fast, but I think no matter what, through Trump's term, we're going to see gold prices go way up. It's hard to imagine we don't get to that that M2 money number, of 23,000 roughly there by 2030. I mean, and these numbers, I know they sound crazy, but when you just do the math on them and you see the way the system is going, those numbers actually seem kind of conservative. I mean, it's as wild as that sounds.
I'm sure $2,000 gold sounded crazy in the year 2000, and then in 2012 it almost happened.
Yep. Yeah. Yeah, but these numbers sound so crazy. What do people think? No one would ever say $5,000 even a year ago. No one. I mean, people wouldn't. They'd feel foolish if they said that. So yeah, I mean, the thing is that what, why, when you use gold as a liquidity sink, there is no upside limit to it. There really isn't. And if they're using it like that, I mean, that's why oil, went from, a couple dollars a barrel, to 12 and $14 a barrel in a very limited time window. And yeah, if it's a liquidity sink, I think these numbers can dwarf the mind, frankly.
And is that really a preservation of capital, or is it also an opportunity to really make wealth owning gold?
Yeah, I would have, like 3 years ago, I would have said, oh, it's just to preserve your capital. But I mean, that example of the housing situation I just talked about is clearly not just a matter of keeping up with inflation. That I mean that you actually profited quite handsomely during that time period. I mean, you can buy more homes for the same amount of gold. So, yeah, and actually, it's Parallel Mike is what he goes by on Substack. He did this breakdown of housing, and he also did the Dow Gold ratio too. And you look at that, I think it was, what did he say it was? Something like 20 times, was it 20 times in 2000, and now it's 11 times the Dow to Gold ratio. So eventually, Bill Bonner's been saying forever, is waiting for this 1-to-1 point, and I think that's where we'll end up.
Incredibly interesting. Talking about equities and gold miners, of course. If this monetary reset were to occur and then currencies continue to devalue themselves, of course, owning cash flow positive equities or even gold miners that continue to increase their margins could be an interesting place to be. Does that have a place in this crisis resilient portfolio as well?
Yeah, we definitely own a lot. We're very heavy into the miners. I mean, that's Doug's specialty
Yeah,
is in the mining space, and so that's definitely the recommendations we have there are that, which are, the portfolio is well over 100% year to date. I mean, this has been a good year for mining companies already, and I think
def-
it's just getting started.
yeah, definitely being a good year. You mentioned it's just getting started. Is there still value to be found in the majors, the producers?
I mean, if gold has no upper limit, what does that mean for the miners? I mean, I think that means that their cash flow is going to keep up and exceed inflation.
Yeah, so really this leveraged bet on gold through the miners.
Yeah, I think we're just getting started with all this stuff, and it's gone, I mean, it's moved a lot in a very short period of time. But again, you see, if you understand this liquidity sink idea, and that essentially like Exter's pyramid, it's got that stacked up from gold all the way up to the derivatives. If you imagine that that's got to be reckoned with in real things, and gold being the center point of it all, um, yeah, these are wild times actually. I think these things could get really extraordinary.
Incredibly wild times. What about the juniors, the explorers? Will those experience a similar effect?
They always have in the past. They've always been. There's such a tiny segment of the market. They're just like a rounding error. So if they get any attention at all, they're going to explode higher because they're just so tiny. They're so tiny. I mean, Doug calls them pico caps. I mean, they're not even micro caps. They're just nothing. And so yeah, any attention there is going to cause them. It has already. I mean, one of the things I've heard Rick Rule say is that usually in a bull gold cycle, the juniors, it takes a little lot longer for it to actually trickle down to the juniors, but we've already definitely started to see it happening.
Yeah, it feels like those timelines might be shortening actually. If you look at the 1970s, that bull market was 10 years, of course. It feels like this one is going a bit quicker.
Yeah, yeah. I mean, who knows how long it'll last in total? But I mean, there were years in the 70s where, gold did go up 60% and 70% in a single year. So we're at 50% now, and it seems like, oh, I couldn't, do that. But I mean, it's at least three times it's been over 55% in a single year.
Yeah. No, great point. Love those historical parallels. Talking PGMs, platinum group metals, and silver. Some consider them monetary metals, some don't. Will those experience a similar benefit as gold will from this larger currency devaluation thesis?
I think they'll get pulled along with it. And, you could argue hard assets in general will benefit from this devaluation regime. But I think gold has a special place that is very unique to it. I mean, the problem with you look at silver, for instance, is that it's too useful to be a monetary metal. I mean, it's too useful for industry for it to be that. The gold is great because can't really use it for that much else, not really. And so it just serving its single purpose as, maintaining value, being that liquidity sink is really good without, again, the second order effects of any other item being anything else you can imagine has second order consequences to it as a liquidity sink. But gold does not have those negative consequences in the same way. Platinum, I mean, we've already seen a lot of big move in platinum, at least in the stocks that I own that are platinum producers. They're up all over 100% this year too. So yeah, I think that it's going to be all that's going to be pulled along, but gold is the most important thing to have. Are you really getting diversification if you own gold and platinum also? No, you might think there might be more speculative upside with platinum at certain stages, but I don't think it's definitely not diversification from the overall theme, and it's not the main show. It's not the main thing you need to own.
Well understood. Why do you own those platinum and PGM group miners then?
Well, they're miners, so they're leveraged, so it's speculative. Yeah, it's all
All
speculative.
right.
Yeah.
Might be an interesting value proposition to be found there. All right, well understood. Talking about trade wars for a second, you already talked about, of course, tariffs. Recently, we've seen an enormous spike in tungsten and antimony prices because China has banned exports or at least limited that. Um, is that on your radar? And how do you expect that to play out?
It is on my radar to a degree, knowing that the U.S. is getting into state capitalism and making investments in different companies. And basically all of the ones that are the critical minerals that are on the Defense Department's list. I think you could look at those. This is what we've done some work on this, where we look at those and then we look at what are the prospects in the U.S. Like what are the companies that actually have assets that might be able to do something to bring those forward. And one of the picks we had in crisis investing was MP Materials, which was the first substantial one that the U.S. made an announcement that they were investing in. Um, so yeah, I mean, I know tungsten is super important, especially for the military. It's definitely that might be number one on their list actually. It's really, really important for them. So yeah, but I don't have any picks on those. I don't. There's not any ones that I've identified where I think there's a good opportunity. It's the truth is though the government is coming in big time to try and make some things happen. And so there's going to be a lot of capital from the state coming in, and I don't think this is I'm not, I don't think it's a good thing, but I think it's going to happen. And I think that, yeah, you can definitely benefit from that if you can get ahead of them, as we did with MP Materials.
Yeah, that definitely sounds like an investable trend you could make use of, even though you might not agree with the direction. What do you think? What other materials on the list could potentially be next?
Well, there's a whole bunch of them. I mean, the truth is like even lithium, lithium, which is, we have a abundance of lithium, but we can't actually, we produce basically zero in the US. So you could look at that. I think we produce 1% or something of what we need. Nickel is in there as well. I mean, the truth is that there isn't much production that the U.S. has of many things, and so you could definitely see. You could just yeah, just go through the list on ChatGPT and say what does the U.S. produce of each of these of the critical minerals, and you'll find that we don't produce nearly enough of anything. And it's I even think maybe they could invest in even copper mines in the U.S. even.
And what do you think of this trend of the US to take up stakes of 10% or buy them or require the company to issue the shares? What do you think of this trend of them to take up critical positions in these critical companies?
What do I think of it uh, ethically, or what do I think of it as tactically?
Both.
Well, I think it's ethically, I think it's a bad idea. I think it's a really bad idea, especially, like you take the Intel example, for instance, where Intel gave the US 10% of the company. Now,
Yeah.
where did that come from? Where did that 10% come from? All the other current shareholders got diluted for that to occur. So, this is like, that's definitely feels like theft. And I think you can expect the government to become more confiscatory along the way. I think we're going to see more of this as we move forward. So I don't like that part at all. Obviously, the state making specific investments in companies, I have a way less of an ethical issue with it. The question is it wise? But I also understand that the U.S., the position they feel like they're in now, if I were a policymaker, I'd be like, well, we don't have any tungsten, and so what are we going to do to get it? And it's a matter of they would consider national security. So, they'll do whatever they have to do to solve that supply chain problem. So it makes sense from a just purely pragmatic perspective that they would do that. And so that's why we've seen a lot of it already, and we're going to see a lot more, I think.
All right, very interesting. Definitely something to do your homework on for the people watching at home. Talking geopolitics for a second, of course, you're located in South America, although this is on the other side of the continent. Venezuela is the hot topic today with the US very active in that region. What do you make of the situation?
What do I make of it? I don't like any kind of war of any kind. I'm totally, totally anti-war. But I definitely think the U.S. made at least a half-hearted attempt to run a coup last time Trump was president in Venezuela. This time, under the guise of fighting drug cartels, I think that's crazy. It's clearly violates international law for them to blow up these drug boats. We don't know if they're drug boats for sure, but they tell us they are, which can't make it to the U.S., by the way. Um, so I think that's all really bad. I mean, you can't see how that's going to end up well. But the truth is they've got a lot of oil, and the U.S. is trying to shore up its presence in South America and Central America. And I mean, as you see with us giving $20 billion to help out Argentina, for instance, I mean, that's a weird thing to be doing, I think. But it's just trying to make sure the Monroe Doctrine, I guess, still exists, as we probably are forced to, out of going bankrupt, to retreat from other, parts of the globe.
Yeah, that oil angle is of course very interesting because Venezuela is one of the largest countries with reserves wise that have been undeveloped.
And it's perfect for the U.S. refineries, by the way, Venezuelan oil.
Really? Oh
You know,
wow.
yeah, yep. I mean, all the shale oil is most of it cannot be processed at U.S. oil refineries. So we actually have to export that, and we have been importing even during this time. I mean, 2 months ago, I know for sure we imported some Venezuelan oil. The U.S. did.
Wow.
So, I mean, it's perfect for our refineries.
Incredible. So it's not really about the fentanyl. You think it's a regime change
No,
operation.
the fentanyl doesn't come from there. Maybe cocaine comes from there. Listen, if you're trying to take down like a cartel operation, you'd think you'd arrest those guys and figure out, because those guys are all 100% replaceable. But obviously, they can lead to people who are not. If you would ask them a couple questions, for instance, instead of just kill them all. So I think they're really serious about really trying to take down the networks. Well, they might target the banks, which launder the money for them all the time, and have paid billions in fines for doing so. So, but they rather than blow up drug boats, I think this is just something that pleases the crowd makes them feel like they're winning, and it gives a good excuse for having all the military assets down there to, at least in the short term, intimidate Maduro.
Yeah, yeah, definitely interesting. Talking about geopolitics, of course, also Iran. It was the hot topic of the month a few months ago with that 12-day war between Iran and Israel, and that the U.S. Partook in. There's some interesting analysis online that the US might be moving some critical assets to that region, and that conflict could potentially flare up again. What is your take there? Of course, a very important region for the energy sector as well.
Yeah, I mean, they moved a whole bunch of air assets there. Probably about 10 days ago is when a lot of it occurred. So if it doesn't happen within the next 10 days or 2 weeks, then you'd have to assume that, they're not going to maintain those assets there for that long. So, but there is a risk in the short term of something happening, unfortunately. And again, I'm very anti-war. I think it would be a huge mistake. I think it's none of our business, and we have nothing to gain whatsoever by being involved there. But that doesn't mean we won't. It hasn't stopped us before.
Yeah, that doesn't mean we won't. Yeah, what's interesting with that one is, of course, the Strait of Hormuz. 20% of the global oil and natural gas flows through that sea strait. If that were to be blocked because of a conflict, it could be a serious pinch in global energy supplies.
Well, mostly to China is who it would affect, more than anyone. Which, if I'm right about my theory of there's some cooperation between them, like they have a handshake agreement to use gold as a liquidity sink, then that probably wouldn't happen. Then that would be an argument against the U.S. acting in Iran.
Yeah. Have you recently seen the news on the Tomahawk missiles that have been potentially granted to Ukraine?
Yeah, I have.
Interesting situation there.
Yeah, I don't think Trump has had any. I think these like national security objectives supersede presidents, and whatever has been, our decision to back Ukraine so heavily early on. I think that that's part of the national security establishment. It's hard to imagine that Trump would really go a different way than that. So I think that these things supersede presidents, honestly. So despite the fact he says he's going to solve it in 24 hours and all that, I don't think there's really been any, because you could stop it in a minute by saying we're not paying the salaries of all of the government workers in Ukraine anymore, or their pensions, which we currently pay April. So we stop that, and immediately I think it would stop.
Interesting. I would love to take you to a completely different direction for a second, and this might seem unrelated, but of course, we've been talking about critical minerals, and this is where it might tie in. Deep sea mining, nodule mining is the technology that a lot of companies are working on, a lot of different countries are as well. Is that something that you think we will see anytime soon, where they mine these nodules from the sea floor?
I doubt it. They've been talking about this forever in different ways. I mean, I remember being, pitched on some private placements for some companies doing this 20 years ago, and it never panned out. I mean, it's so I think there are enough resources that are known, that are on land, that are easy to get access to, that are easier to process and refine, that I think until they're fully exploited, I just can't imagine. I think those are probably boondoggles to draw investors in more than anything. Even if it's technically possible, it's not economically justifiable. We have a lot of mines that are just mothballed, that are on care and maintenance around the world. And I think that, until they start leveraging everything they can or granting permits where they can, I just don't think that this is gonna, I don't think it, I mean, I wouldn't participate. I'm glad I didn't 20 years ago. Let's put it that way.
It also sounds like an environmental problem to solve, of course, scraping these nodules from the seafloor. However, some of them could be up to 20%, 30% metal. You could envision a world where the cost of that could be lower than a mine.
Yeah, it could be, but it's how much energy does it take, to, I mean, because I mean, the way that Doug puts this is that, there are elements of everything everywhere, but that doesn't make it mean it's economic. you know, to be able to produce it. He's like in your backyard, you will have elements of everything, but nowhere it will be nowhere near. I mean, I have to go pretty deep for it, but nowhere near anything that could be economic to produce.
Yeah, and what you mentioned earlier, there are mines all around the world that are in care and maintenance that were producing 50, 60 years ago. So much low-hanging fruit to look for resources on land.
Yeah. Yeah, I just don't. I mean, it's a nice story though. Like people get really excited about it. It allows people to raise money and, but yeah, I don't, it's just not, we don't need it, I think is the bottom line.
Interesting. A nice story, perhaps the AI story of the mining space.
Exactly. Yeah, you gotta get some technology in there somehow to justify the new deal, new stories.
Matt, I would love for you to talk shortly about your book, The Preparation. Really, why did you write it and who did you write it for?
Well, I should say the book was originally Doug's idea. So I wrote it with Doug and my son, who is now 20. And the idea was Doug originally pitched it to me. He called it Renaissance Man, is what he wanted it to be. And he said, when I asked him what he wanted it to be about, what it was about, he said, it's about the three most important verbs in every language: be, do, and have. And he told me this in a car ride from to lunch in Aspen 12 years ago, and we first pitched me on it. It didn't. I had no desire to write a book, but when my son was 17 and on the cusp of 18 and needing to make some decision about what to do with his life, I could see a lot of anxiety in him. I'm a college dropout, so I didn't brainwash him and tell him that college was the key to success. But in some ways, I think that made it way worse because he didn't really know what's next. What should you do? And the three choices available for young men are to basically join the military, go to trade school, be a plumber or an electrician, something like that, or go to college. And none of those three are very good options, I think, because the best case, what they do is they prepare you to be able to pay your rent. Not saying that's not good. Obviously, you should be able to pay your own rent, but as far as a worthy pursuit, it falls quite short. And the idea of the book is really not to answer the question what kind of jobs you want. It's what kind of man do you want to become. And the book essentially is geared for people in that 18 to 22-year-old age group. But I'll tell you, since it's been out, the feedback we've gotten from people that are a lot older and very interested in doing it. I mean, three people in their 70s have emailed me and saying, I'm going to do this. Um, it's been pretty amazing, actually. And essentially what it does is it puts a young man through a real hero's journey where they're basically getting a real education in the real world, doing real things, getting real skills along the way, most of which could turn into a career, but they don't have to. And they really probably shouldn't because it's the combination of all these broad-ranging skills together is really where the real value comes. And my son has been our guinea pig for the last 2 years as we've tested it. And, so what can I tell you about it? Basically, we break it down into 16 cycles or 16 quarters. So we're basically trying to compete again with college, which we think is a mistake, a misallocation of time and capital and energy. And instead do this path. And each quarter essentially has in it an anchor course, we call it, which is like the main event. That's the main activity where the adventure, if you will, which I'll get into those in a second. And then it layers on all the academics. I mean, you can get the entire MIT course catalog online for free. Sorry, whatever college you're planning to go to probably isn't as good as MIT. So if you really want that, that you do need that education. I think that is really important, but you don't miss out on it with the preparation. It's part of it, and it's ingrained in these cycles. And there's reading and accountability that we have some exercises we have people do, but essentially the anchor activity is the main event. And so for my son, he became an EMT. That's like a junior paramedic, I guess, if you think about it. Like it's somebody who can work on an ambulance. It's a great skill though, because if you ever find yourself in a situation where someone is actually injured, you legitimately know what to do. So getting your EMT certification, becoming an EMT is one of the anchor courses, for instance. Um, he went sailing, learned to sail, threw him in the deep end for this because he sailed around the Falkland Islands and through the Strait of Magellan. His first time on a sailboat. It was quite an adventure for him. That's one. He's currently in the entrepreneurship cycle, actually, right now. Next, starting in January, he's got the what we call the fighter cycle, where essentially you go to Thailand and you study Muay Thai for a few months. Um, there's welding in there. There's this place in Maine called the Shelter Institute where you learn to design and build a home in 3 weeks. Amazing skill, right? In 3 weeks, you're in and out. Now, most people who go to it are not these 18 to 22-year-olds. They're actually older adults who go, I'd like to be able to understand, the world that I live in. Maybe they want to build their own home, but at least even understand it, because most people have no idea. I mean, our society has gotten so, everyone is so specialized in what we do. We have no understanding of how things really work in the real world. I mean, we just we order our food on Uber Eats. I mean, we don't have to know much at all. Just a few taps and we get our food. So the idea is that in the end, you do come out much more like a Renaissance man. And the idea that fundamentally you do understand how the real world actually works, and how you can interact with that world successfully. And you don't get that at college at all. You learn a bunch of abstract ideas, but you come out of it not actually knowing anything. I mean, as I say this as somebody who's hired thousands of people over my life, and many of them college graduates, all had to be trained when they started on the job.
Incredibly interesting to hear about a different path for a young individual. Of course, if you just look at the statistic of how many people go to college or university now compared to, for example, 50 or 100 years ago, that's inflated massively. So no wonder the degrees have become worth a bit less, at least.
Yeah, there's that, and then there's also the actual cost.
Yep.
The U.S. now, if you factor in all things, including the opportunity cost that you would from the money you would earn, and then even a dead-end job, the median cost in the U.S. is $300,000. Now that's the same as the median net worth of American households. Like, that's an incredible investment to make in hopes that you're going to be able to pay the rent. So that is it's hard to justify that. But I think even worse than that is that at 18 you have incredible amounts of energy. You're open to novelty in a way that you'll never be again in your life. And that energy being channeled into this wasting away that happens at university, where you're a full-time student if you're taking 12 credit hours a week. Like, that's not the real world. 12 hours? Are you kidding me? How's that full-time? I mean, 80% of, I'm a college dropout. I did go for a year and a half, though, and I can say 80% of it was hanging out. It's hanging out. Nothing's anything wrong with it. But a young man with this energy, this openness, and with no liabilities, for them to decide to institutionalize themselves, put themselves in this limited safe space, where they can engage in approved unreal activities, like you're living in a resort essentially, does not in any way prepare them for the future, and is a huge waste of time compared to what one could do instead. I hate to brag about my son, but if you look at what he's done in 2 years, it's incredible. I mean, it's incredible. And he's a totally different human being than he was 2 years ago. So I think that I wouldn't have had confidence publishing this book unless we were able to use him, my son, which he went along with willingly, but most of the time. But his success has been really amazing, frankly. It really has. And I'm quite confident that it's nothing super complicated. Anyone could do it.
Awesome. Thank you so much for your generosity with your time and insights today, Matt. We'll make sure to link the book down below in the description for anyone interested.
Yeah, thank you very much. I really appreciate it.
This podcast is for general information purposes only and does not constitute investment advice, an offer, or solicitation to buy or sell any securities. The views expressed are those of the host and guest and do not necessarily reflect the views of the company or their affiliates. Guests on the show are not compensated for their appearance. Certain discussions may include forward-looking statements subject to known and unknown risks and uncertainties that could cause actual results to differ materially. Listeners should do their own research, consult a licensed financial advisor, and not base any investment decisions solely on the information discussed. For a full disclaimer, please visit our website, and for full disclosure and risk factors of any companies referenced, please see full available disclosure and risk factors under CEDAR Plus at www.cedarplus.ca.